class. Come join the crypto community. Learn, ask questions, see for yourself.
Hey everyone, hope you're having a great Saturday. I just have 3 investment fundamental thoughts that I want to share with you today. The first one is, what is your investment identity? Are you a trader? Are you an investor? Are you kind of a mixture of both? It's really important to find out what your natural personality style gravitates towards, what's your strengths, what's your weaknesses. I tend to be very much on the investor side. One, because I know traders, 90+% of them fail. And if that's true in traditional markets, what do you think that fail rate is in the crypto market, the most volatile and dangerous market in the world, right? So take my thoughts for what it's worth. I'm not here to tell you what to do. I'm just giving you my thoughts. My personal opinion is, if you don't have a lot of trading experience, probably not the best idea to start being a heavy trader in the most volatile market in the world, right? Maybe you would have a better time just being able to buy something that you actually studied and believe in, and then just hold it for a while. That's my thinking anyways. Again, I'm not here to tell you whether to be an investor or trader. Some people's personalities are just different. Some people get so bored by just holding that they feel like they have to do something in order to feel a sense of accomplishment. Now that's kind of a dangerous place to be, in my opinion. I agree with Warren Buffett when he says that inactivity strikes us as a very intelligent behavior, right? Sometimes doing less is doing more, because if you know what you hold, and that's a key point, you can say you're a long-term holder all you want, but if you don't really put in a little bit of time each week to know what you hold and kind of give yourself that muscle memory and remind yourself, oh yeah, this is why I hold XRP. This is why I believe in it. These are the reasons, these are the things that are going on. And then looking for reasons for red flags as well. So, okay, that's number 1, investment identity. Do you tend to be that person that gets really bored so quickly that you got to do a trade? Or do you tend to be someone that just naturally is patient and wants to just let this market play out and almost have to be convinced to take profits, otherwise you would never take profits? Those are the 2 extremes, right? Where do you fit in between those? Okay, number 2. Number 2, I want to talk about overconfidence. Research studies suggest that investors tend to be overconfident in general. And so I want to come back to another thing Warren Buffett says. Like I said, I'm a student of Warren Buffett. He says that the most important quality of an investor is not their intellect, it's their temperament, right? The ability to master your emotions. So let me give you an example. I love sports. One of my favorite players in the NFL, his name is Taysom Hill. He is a backup quarterback for Drew Brees. He's got the start. He's killing it, right? He's one of these quarterbacks that can beat you with his speed as well, with his just brute power. He's just a powerhouse. So I remember him in college, and it was a rival game with the University of Utah, just this big rival game, right? Came down to the last moment. He was on like 4th and 2 on the goal line, and he got stopped and they lost the game. And in myself and my family were like, oh man, if the call would have just been him not running right straight up the middle, maybe if they would have had him use his legs and run around, or even pass the ball or do something less expected, we would have won the game, right? So we like to play Monday morning quarterback with our sports. Well, I think we like to do that with our investments too. I was on Facebook the other day and I was watching this XRP chat, and one guy was like, hey, if I would have just sold when XRP hit 72 cents, and then if I would have bought when it hit 45 cents, I would have made money. And I should just sell every high and buy every low, right? And I'm not mocking him. Like, when you look at the charts in hindsight, you're like, oh yeah, I should have totally done that. I would have made money. It's so easy to get caught up in Monday morning quarterbacking and saying, oh yeah. But here's the thing. How did you know that it was going to stop at 72 cents? You did not. So you sell at 72 cents, that thing goes to $2. You're out of luck, right? Unless you just sold a small portion of it that you were planning on, which, fine. You get my point though. You don't really know how high it's going to go. You don't really know how low it's going to go. And you're not going to guess with high accuracy over time unless you are just some amazing trader. Now, for that small percentage of experienced traders that are just know what they're doing, this really isn't applied to you, I guess. But for the rest of us, the majority of us in this volatile market, we're just have to be really careful to not lose the greatest opportunity financially in your lifetime. See, the first goal is to not mess it up, okay? In medical terms, do no harm, right? That's the first rule of medical school, do no harm. Well, that's the first rule of investment school here in the crypto market as far as I'm concerned. Do not lose your crypto, okay? Try to hold on to it. And so we tend to be overconfident. I was so emphatic about Taysom should have done this instead of done that. But we don't know. We don't know how the defense was going to play the play, right? We weren't on the field. We weren't there to see. So sometimes you got to realize that you have two choices, okay? You can play like you're throwing darts at a dartboard and just hoping something sticks. And I'm afraid that too many people in this space are approaching their investment like that. They just throwing darts at the dartboard and hoping something sticks. And even when it sticks, they might undo themselves because they allow their emotions to rule their decisions, right? Again, I'm not here to tell you to be an investor or a trader. What I'm saying is make a calculated, well thought out risk, okay? So that brings me to number 3. Okay, number 3 is obsessive price checking, okay? We live in a world of instant gratification where we can get updates all the time, especially in this global market where it doesn't close after 5 o'clock or whatever time, like the stock market, right? Or even on the weekends. So I put a challenge to you. How many times do you check the price a day? I challenge myself. I try to check the price once a day. Unless some significant price movement is happening, I'm on Twitter or Facebook and someone's talking about it, okay, that's different. But in general, I'm not out there looking at the price, hey, blah, 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 because I'm looking at this as a business owner. And again, as Warren Buffett says, when you buy a farm, you're not having to go out to check the corn stalks and see how much they grew for the day, right? You just, you're not really focused on, are we going to get rain next year when you buy the farm? You're buying the farm because you believe and you've put in the study to know what you hold to see it out for the next 5, 10, 15 years, right? So that's my thought on that. And I am curious to hear what your strategy is. Are you a holder investor? Are you a trader? Or do you see yourself a combination of those two? And what is your approach? All I'm asking is make a calculated, well thought out decision of your investment identity. Know who you are, okay? I'm an investor, almost 100% investor, all right? And yeah, thank you. We'll talk to you again soon.